to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment we have Konstantin Richter. He is the founder and CEO of Blockdaemon. We're going to discuss institutional blockchain adoption and expanding into Singapore and Asia. Konstantin, it's great to have you with us. Welcome to Trade Talks.
Thank you.
All right, tell us a little bit about yourself and what Blockdaemon is, what types of solutions that it's provided.
Yeah, sure. So yeah, I'm Konstantin. I'm originally from Germany. I'm the founder and CEO of Blockdaemon. We're the largest crypto infrastructure provider in the world. So we provide what we call the core node stack, which is really the individualized ledgers that live in the cloud for all these different protocols like Bitcoin and Ethereum. And so we run this sort of pretty crazy crypto infrastructure on behalf of institutions who need really secure on-ramps for data and transaction throughput. So think of it as the transaction pipelines as well as the reward earning pipelines on crypto protocols for institutions. So customers range from the Goldman Sachs's and the Citibanks to the PayPals and all the largest exchanges, custodians in the world. And so we're fairly ubiquitous. It's a software platform. We have around 50% market share in the global institutional space. And yeah, we've been around for a little over 4 years. We've raised $400 million to date. We're 250 people and just recently opened an office here in Singapore.
It sounds as if that's really a lot of velocity behind you to raise $400 million only within 4 years. So rather than large institutions building the infrastructure themselves, they're leveraging your solutions to put into their infrastructure, basically.
Correct.
You just opened an office in Singapore. Why the push into Singapore and Asia?
Yeah, so Asia has always been one of our biggest markets. As a software platform, it's relatively easy to sell software, you would think. If people can go on a website and activate things. When it comes to crypto, having really direct relationships with customers is very important. Trust and stability really matters. And the crypto networks are still so early where either has to be earned, right? And so I feel like having people on the ground, being strong and showing also commitment to the region allows us ultimately to serve our customers better. It's been a really good decision. We opened up here earlier in the year, and it's been really remarkable how much of a difference it makes in actually serving customers.
Well, I mean, even look at, we had to do everything hybrid and remote for the Singapore Fintech Festival in 2020 and 2021. It is definitely a very different vibe when you're back on the ground and putting a face to the name to the people that you've been talking to for 2 years over Zoom or remotely. Tell us more about the institutional adoption of blockchain. Do you think we're still in early stages, or has it matured a bit?
Yeah, I mean, we're in early stages. I think the big difference, though, compared to, like, for example, the last crypto winter, which was in 2018, was that we saw a lot of institutions pull out of crypto. And because we build core infrastructure, what we haven't seen, or we're really seeing the opposite, we see really all major financial institutions laying the foundation to allow their customers to interact with crypto. So we haven't seen any pullback because of the market collapse. Quite the contrary, we've seen more outsourced and immediate pace into crypto offerings. I think a lot of the financial institutions are aware that the crypto cat is out of the bag, so to speak. Everyone, the people expect to be able to purchase Bitcoin and Ethereum and to send it around. I think we really saw a sea change over the last 12 months here. And so for us, for example, because we just said core infra, we saw 60% growth quarter over quarter over the last 2 quarters, which is really a good indicator that a lot more financial services companies are coming into the space. What I would say has slowed down is the volume, right? And so everyone builds the capability, but they're slower to put more assets onto those chains, mostly because everyone is conservative with how they deploy assets, considering how the market economics play out. And so I think and the regulatory uncertainty. And so pipelines are getting primed and set up, but they're not really fully, the lever hasn't turned to really put volume into it yet, which is what we're really bullish about. We see a lot of that happen probably in the next year. I would expect a lot of the institutions to offer basic services like acquiring Bitcoin, Ethereum, and to trade it and potentially earn interest on it. I think we'll see one of the top 10 global banks allowing the core customers to do that at scale over the next 24 months.
Well, I also think now that the infrastructure is being put into place, that's also going to help push along regulation. Before it was sort of, there really was no infrastructure. It was kind of this black hole of retail crypto trading, but now it seems as if the framework is in place and it can almost help the regulators conceptualize what's happening under the surface here.
That's so well put, and that's exactly what's happening. And there's great companies like Coinbase really out there now fighting that good fight with the regulators. I think the crypto industry has been underserved by regulators. I think we've all been very clear that we crave regulation and clarity, and regulators have been very slow to actually put their word on paper to say this is how we're going to regulate you. I think at this point in the crypto industry, we will take whatever comes to us. We just want to ultimately run our business in accordance with the law, as well as with consumer protection in mind. I think a lot of the criticism, specifically over the last 12 months, has been unfair on the crypto side. There's been a lot of efforts to get clarity from the respective regulators, and I think you nailed it. Because there's products, because people are coming into the market, they can't put it off any longer. They need to provide clear guidelines to protect consumers. All
right, Konstantin, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me throughout the day at the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.